What is going on, investors? Hopefully, guys are doing well out there. I know you've been waiting all week for Friday to come because that means it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks, including Microsoft and Tesla and Meta and Apple and Amazon. And we've got a lot of news this week out of Google, and we had most of these stocks pulling back dramatically this week. And so it's good. Buckle up. It's going to be a big show, and we're going to have a lot to discuss, certainly from a buying perspective. Start things off like we always do with Meta Platforms. Start the week at 168. Is that right? Down 13%. And I lost over $100 trying to trade this stock unsuccessfully this week. End of the week, again, down 13.33%, down to $146 per share. Now, I think just broadly, most of you know, if you've been following this channel for any length of time, I've been bearish on this stock after the first earnings report of this year. The stock gapped down to, I think, like $200 or $220 per share. I exited this investment after that drop right around, I can't remember the price I got out of it, $200, $220. Obviously, looking back was the right decision. Hard to tell at the time, but obviously I've been bearish to this name, but going down another 13%, and we've got a valuation, I think it says here, $400 billion. I see it on other sites. It's probably not factoring in today's drop. You've got a valuation on this one now south of $400 billion. I think on a good day, you could get that maybe just for WhatsApp and Instagram, let alone core Facebook and the silly little goggles that Mark Zuckerberg likes to play with. I think at some point we are going to get back into this name. I'll do some more research as we head into earnings when it comes to Meta. Now, Instagram launched a payment system inside its chat feature. This is for businesses. So a lot of commerce, not breaking any news here, a lot of commerce gets done on Instagram. A lot of commerce gets done on WhatsApp in particular. And that's a huge opportunity, I think, for Meta down the road to start monetizing that. Now, initially, this feature is not going to charge any fees. You're going to be able to use Meta Pay to pay with a debit, credit, or even PayPal as well. Obviously, I would assume Meta at some point layers on some kind of service fee with this, or maybe some kind of add-on feature that would cost money for some of these businesses, or they're just getting more and more data, which they obviously can use to market to you and your friends. Now, not a lot of news out of Meta, but again, from a fundamental perspective, that one's starting to look a heck of a lot better as it's pulling back steeply in its valuation. Moving on to Apple, start of the week at 160. This one down almost 6%. End of the week, closer to $150 per share. This is after Apple and Amazon decided to pass on those live golf rights. This is an upstart, quote, upstart golf league. It's run by the Saudi government, and a lot of people kind of blame that as kind of the golf league getting a little bit of a cold shoulder. The French could have started a golf league. Anybody could have started a golf league that competed with the PGA Tour, and everybody would have hated on it because the PGA Tour has a monopoly on professional golf in North America. So it's not necessarily just because this is Saudi backed, but that does play into it a little bit. Now, who this is bullish for is the fact that all of these broadcast networks from CBS and NBC and ESPN, even Fox to a certain degree, they all have contracts with the PGA Tour. And the PGA Tour has made a very hard line. If you go over to Live Golf, you're essentially canceled. And so the ESPNs and all the other networks cannot pick up this league. Who this is bullish for is this league is currently airing their events here on YouTube. And so Google gets the rights to this event essentially for free and are able to monetize it how they wish. And so the longer this league stays around, draws some kind of audience, well, I think that's actually bullish for Google because they don't have to pay for the rights to this league and they get to make money off it. I think it's a brilliant strategy for Google. Now, iPhone 14, those pre-orders demand is expected to be robust, and it's tracking, quote, slightly ahead of iPhone 13. This is according to analysts out of Wedbush. Now, with the iPhone 14, I think all of us as investors are anticipating this device is largely almost identical to a 13 or a 12 or whatever. It's really all going to be about, first of all, you have those carrier subsidies at Verizon and T-Mobile and AT&T. They're very generous. I mean, out of pocket, I upgraded to the new iPhone 14. I think for like $200 because AT&T basically gave me $1,000. I had a trade-in credit. I barely had to pay anything for this darn phone. And so I think you're going to have a lot of upgrades just based on those facts, but also it's going to be the mix. Okay. How many people are going to move up to that $1,100, $1,200 phone. I'm going to assume most people that had a $1,200 iPhone 13 Pro Max or a 12 Pro Max are probably going to go there. But how many people are going to move up into that higher price phone? The greater of that mix, obviously the higher revenues and likely higher profits for Apple. Now, Apple is planning to use TSMC, which is ticker symbol TSM, to continue their chip technology inside iPhone and MacBooks next year. Now, Apple, over the last couple of years, has transitioned away from other chip makers, not necessarily in their phone, but certainly the MacBooks and across all of their devices. Now, I believe every single device that Apple sells, the actual chip that runs the phone, not the modem chips and some other, maybe some smaller components, but the actual physical processing chip is now designed by Apple and largely made almost 100% by TSMC. Now, there is some political risk there. I'm not breaking any news here, but the US and Europe is considering some sanctions to deter China from invading Taiwan. This obviously would be, I wouldn't necessarily say bullish, but it would take some of the risk off of investing in TSM, which we've looked here on the channel, has spectacular financials, and certainly would reduce a little bit of risk for Apple as well if these sanctions get put in place and they look like they're working. Now, this is not the geopolitical channel, but I do a fair amount of research. I try to get as much research as I possibly can. It's tricky in this situation because obviously if you go and listen to China state-run media, you're going to get the runaround. If you listen to a lot of people that come from the West, like Europe and the United States, well, they're also going to give you kind of a slanted kind of political view on this. My broad read on the situation is it would be rather reckless for China to invade Taiwan. Not saying that it's not going to happen, but that would be a pretty risky and reckless political move that most analysts that I listen to and that I think have a keen understanding of both countries and the fallout that would happen if they invaded Taiwan, most are saying that this is actually pretty unlikely, China invading Taiwan. Now that I say it, I'm going to knock on wood for the safety and the peace in the world that it doesn't happen. But now that I said it, maybe something bad happens. Moving on to Amazon, start of the week at $134. This one down nearly 8%. End of the week closer to $123 per share. Folks, you should get excited when these stocks go down in value. Don't sit there and curl up in a little ball and start crying. Think about what are the prices you're going to acquire and accumulate these stocks are, because do a max chart of almost all of these stocks and it's a straight arrow up. You want to get in on that. ECB, which is the European Central Bank, chose Amazon and a couple other partners, really just 3 other partners, to develop a prototype of a digital euro. If you think that the governments want to create a digital currency where they can track every move you make, every dollar you spend, you better believe they're going to do that. And I love, as an investor in Amazon, that 54 applicants applied to this, and Amazon is one of the few to get clearance to actually work on this project. Amazon is going to work on e-commerce payments. You love that. And I think that's going to give Amazon just a wonderful competitive advantage if they work closely with the European Union to create a currency. Chances are Amazon's probably going to have a pretty big business in Europe for basically infinity. So you got to love that. Now, some problems for Amazon out here in California. They are suing Amazon over alleged anti-competitive pricing practices. Attorney General out here in California, Rob Bonta, who's a piece of work, he is saying that the e-commerce giant is artificially inflating prices. I tell you what, folks, the politicians and the people that get elected out here in California are a special breed. I think some of you are saying, well, you must be some conservative Republican. No, there are Democrat politicians that I actually like. There are Republican politicians that I actually like. Most of them from both sides, I think, are complete and utter morons. Amazon adds new driver benefits, hikes pay amid union challenge. This was interesting. So essentially what Amazon does, when the Amazon van pulls up to your house, it's actually very similar to the FedEx model. That's actually an independent contractor, but Amazon is subsidizing that a little bit. They get them these vans. They give them a little bit of support. They give them obviously a lot of infrastructure and software. And obviously they're basically tag teaming them to help them pick up these packages and deliver them to people's doors. This is called the delivery service partners. These are DSPs. Again, these are not necessarily employees. These are not wholly owned, like a subsidiary of Amazon. This is a quote partner of Amazon. And so what Amazon is going to do, they've realized that the drivers want more benefits. And so they're going to put $5,200 towards academic programs, including maybe the drivers getting bachelor degrees and things like that. They're also going to add over $60 million in the first year to help these small business owners help do employer match on 401k. There's going to be some other things that they contribute to. I think this is a great move by Amazon because the company's competitive advantage, Amazon has a lot of competitive advantages, but one of its biggest competitive advantages is they do have these DSP partners and they do have a large amount of control over that delivery network. And so look, $62 million, $5,200 for some employees to go get an education benefit, quite frankly, on a company that's not printing a lot of net income, is not going to impact the company that much. Moving on to Netflix, the one stock out of all of these, I think that actually went up this week. This stock started at $235. I'm actually amazed how well this stock is holding up. It finished the week at $240. And it's, to me, it's like maybe looking for the one silver lining that you have on a week where a lot of these stocks went down 5, 6, 7, 8%. But the fact that Netflix holds up, certainly probably bullish for most of these names to eventually rebound, obviously. Roku jumped as a new change in control language inside of an 8K that was filed sparks a takeover speculation. Now, a lot of times these are spurred by like corporate lawyers or things like that. And obviously, there's got to be some internal discussion over at Roku. It wouldn't surprise me if Netflix has kicked the tires on Roku, potentially maybe like an Amazon, maybe even like a Google or an Apple might have kicked, maybe even like Microsoft as well, since they don't actually, Microsoft's one of the few companies out of this group that actually doesn't have like a streaming video kind of partner. And if they want to get into the business, buying Roku might actually be kind of interesting because look, this company was up over, I mean, I'm seeing over $320 this year. Now you got a $71 stock. You got a $10 billion valuation on this one. So at some point, I can imagine this company gets some kind of bid or takeout offer, whether it comes in the shorter term or the longer term. That certainly could be bullish for Roku, maybe not necessarily bullish for Netflix. I don't know if regulators would allow Netflix to buy Roku, so it may not be bullish for Netflix that Roku is purchased. Just depends on who ends up buying it. Now, Netflix is aiming for 40 million ad-supported viewers by Q3 of next year. We're looking just a year away. Now, this is a company with over 220 million subscribers, and this article or this analysis kind of said that 40 million viewers is a small figure compared to 220 million subscribers. I actually would challenge that. That actually is a large amount of viewers. To get 40 million people viewing ads, you're looking at like a Super Bowl like audience. And I'm not saying that Netflix will be able to charge $1 million for a 60-second spot, but if they can scale this business up to 40 million ad-supported customers, that is going to be incredibly bullish for this company. And we've been saying that here on the channel. And Evercore kind of piled in. I listened to a lot of other analysis this week. They're upgrading Netflix based on this ad upside. You get 40 million people viewing ads. It's going to add a lot to the top line revenue. Not necessarily the operating profits, not necessarily net income, because they are partnering with Microsoft on this deal. Microsoft's going to serve a lot of the ads, probably do a lot of the ad sales because Microsoft, that's one of Microsoft's specialties with the Bing social network and obviously LinkedIn. Not only that, Microsoft obviously has relationships with almost all of the world's richest companies running their 365 software, so they can pull in a little bit of maybe advertising there as well. What this is going to do is transform Netflix's top line revenue number. And again, on a company with $104 billion market cap, all of a sudden you have 40 million people viewing ads. I think that's going to be bullish, and obviously the analysts are starting to line up and agree with me. Now, Netflix teams up with Ubisoft for 3 new mobile games. These surround essentially popular shows on Netflix. I think this is not necessarily going to be incremental to revenue. It might be a small bump for Netflix, but this is another piece of the pie for this company. I like the direction Netflix is moving in. Moving on to NVIDIA. This stock started the week at $143 per share, down 7.75%. to end the week at $131 per share. NVIDIA hit a 52-week low this week as chip stocks just got obliterated after that hot inflation report earlier in this week. Intel decided to kind of internally cut their Mobileye valuation to $30 billion for some kind of upcoming IPO, which quite frankly, I don't think is going to happen anytime soon. Now, this company, and I'm referring to Intel, paid about $15.3 billion for Mobileye in 2017. I've got news for Intel. Certainly in this market, Mobileye is not even worth $30 billion. This is a company, and I'm referring to Mobileye, that doesn't generate a lot of revenue. It doesn't generate a lot of profits. That would be an extraordinarily rich valuation. Certainly 2 years ago, you probably could have got $30 billion for it. Maybe 2 years from now, the market heats back up. It's certainly possible they get this type of valuation, but we're in, difficult times right now when it comes to equity valuation. Moving on to Google, start of the week at 111. This thing's down 7.4%, down to $102.80 per share. We'll certainly talk about Google from a technical perspective, but we got a ton of news for Google YouTube to turn up the monetization on its short form video. Currently here on YouTube, you need 1,000 subscribers and you need at least 4,000 hours of watched videos. Obviously, this is a difficult hurdle to challenge when you are just posting shorts. Those are those vertical videos that I think can be limited to about 60 seconds. I'm probably not breaking any news here. You're on YouTube, you're aware of these things, but you might not be aware. If you say you start a new channel and all you're doing is posting shorts, it's actually difficult for you to gain subscribers. And certainly because these videos are really short, it's hard to get 4,000 watch hours during that same time frame. And so YouTube is likely to expand that offering, maybe offer this to more people, and that is going to bring more people posting those shorts here on YouTube. I personally, and I'm fortunate enough to have multiple channels monetized here on YouTube, including this channel, obviously, and I personally think they should open up to more people. That's just my opinion. Now, Google is issuing cutbacks in experimental project groups. Now, what we've seen over the last couple of weeks with Google, it makes me a little concerned about the upcoming earnings report because we see this with companies a lot. As the company is getting a view into the most recent quarter, they're starting to put together the financials. The CFO is starting to work on the upcoming earnings report. They're starting to get a look at revenue. They're starting to get a look at expenses and profits. And my guess is the upcoming quarter over at Google probably going to be pretty bad because all we've been hearing out of this company is the fact that they're cutting projects, they're cutting employees, they're going to do this and they're going to do that. I like that in the longer term, so I'm not concerned about Google in the longer term. I am concerned a little bit about the upcoming earnings report and it being pretty rough because I think if Google was going to meet their targets or exceed them by quite a bit, they wouldn't really be worried about some of these smaller projects. They might even be worried about giving some YouTube creators a little bit of extra money for monetization. I don't think they'd be worried about that if revenue and profits were going to come in line or beat estimates. I tell you what, if this company does come in line or beat estimates, it's probably wildly undervalued because they are doing a lot of cost cutting. Now, some of the other overhangs on this stock is the governments out there are just cracking the whip on this company. An EU court did reduce a fine, but they settled right around 4.12 billion euros, which is probably at the exchange rate right around $4 billion in US dollars. Google is going to come into their pocket and have to pay a $4 billion fine. That's a problem. Now, another judge says Google must face state antitrust claims over online ads. This is a victory towards states as the judge only dismissed maybe one claim that the tech giant kind of refuted, and now the rest of these are going down the road. This is what happens when you have lots of cash and you have a lot of greedy politicians that need and want that cash. Now, Google is going to face potentially a $25.4 billion fine. I mean, $4 billion is one thing. Google could shed $4 billion off their balance sheet. I don't think anybody will notice. $25 billion is a whole nother story. And this is, again, more damages and claims over ad practices. This is based on a Dutch and a British court. I tell you what, $25 billion would sound to me like maybe a record amount. So this is what they're at. It's almost like your kids asking you, they're about to go out for the night. So they kind of shoot high. Maybe they ask for $100 and you settle on 20. My guess is that what these politicians are doing here, and we'll see what happens there. But I tell you what, if Google is levied with a $25.4 $1.4 billion fine. That is tangible to a company this size. Now, Google signed an R&D deal with the Commerce Department to create new chips for researchers. So as the governments are slapping this company, it's also getting in bed with the bureaucrats as well. Now, with all seriousness, I actually like stuff like this. Google's actually going to front some of the R&D. They're going to front some of the technologies. What this ultimately does, first of all, it gets you a little bit closer ties to the Commerce Department, government, things like that. That can be good, obviously, in cases where the government is constantly attacking your company. That can be a good sense. But what it also ends up doing is Google spends R&D for the Commerce Department, but then they use that technology or that R&D and they can apply it to maybe something that they can actually make a large amount of profit for, or they could end up getting a government contract as well that is a pretty sustainable amount of revenue. A lot of Google news today as the company canceled its new version of its Pixel book and dissolves its computer hardware team. This is allegedly as a lot of these devices were actually very close to being released. Obviously, we're coming up into the holiday season. Google canceling their Pixel book. And so certainly showed that there was probably limited demand for this. Obviously, you have MacBooks, which is a small part of the market, but you have more PC-based stuff. That is a much larger segment of the market made by HP, Dell, and several others. This, again, supports my argument that the upcoming earnings for Google are probably going to be a disaster. Now, if I'm wrong, that's probably very bullish for the stock, but these moves, as again, the company is starting to put together the financial pieces over the last 3 months. And obviously a company of this size, I'm not breaking any news, those are pretty complex financials. They don't have a window into these financials 24/7. They put together it over a period of time. And I think as they're putting together, the CFO is going to the CEO and saying, folks, we need to make some tough changes. And that's exactly what Google is doing. Moving on to Microsoft. This one started much higher, 265, end of the week, 7.9% down to $244 per share. You better believe I bought that stock as well. Activision Blizzard unveiling action from its Call of Duty release. Again, this video is scheduled to release on October 27th. Call of Duty is routinely a best-selling game for Microsoft. Obviously, right now, Activision Blizzard owns the rights to that, but as we know, if approved by regulators, Microsoft will own that video game property here very soon. Now, the UK ordered Phase 2 probe of the Microsoft Activision Blizzard purchase. We also have an in-depth review coming from the European Union. I am not aware of the election cycles outside here in the United States, but my belief with this deal, which was announced at the beginning of the year, it will magically be approved after the election cycle is over because all of these politicians want to hold this over Microsoft's head so they don't pay for competitor ads and they donate to the campaigns that they want them to donate. If that's a cynical view, maybe. Moving on to Tesla. This one, okay, I said Netflix was the only stock that went up. Actually, Tesla held up very well this week. This stock is holding up beautifully, up to $303 per share after starting the week closer to $302 per share. This is after Tesla further improved its delivery cycle in China. They are doing this week after week after week. We've seen it go from like 6 weeks down to 4 weeks, and now you're waiting just 1 week for most models in China for these cars. That is incredibly bullish. And I think Tesla is becoming more of a story about China, at least in the shorter term. And the long, obviously there's a lot of risk with that. Okay. There is plenty of risk with that, but there is a lot of reward as well if you become a China story. And right now Tesla is a gigantic China story. Now, the company is reportedly looking for a China strategy reshuffle. This is what I also really respect about Tesla. There's clearly selling a boatload of cars in this country, but what they're actually looking to do is actually close some showrooms in expensive locations and actually focus on lower cost stores in suburban areas. My guess is they're doing their market research and they're seeing the vast majority of demand for these cars, maybe not necessarily right now, but in the future will be in those suburban markets. So they're starting to get into those markets and start to get kind of boots on the ground, so to speak, in the suburban areas of China. They're also looking to invest in, obviously, the service platform. Anybody that owns a Tesla, and I own 2 of them, know that you are dealing with Tesla service quite a bit. It's not a Mercedes. Newsflash. Now, Tesla's Gigafactory expansion in Germany delayed indefinitely. This was a really weird story. This was really related to expanding this factory, I think, from a battery-related technology. Now, there was that bill that was passed. I think it was called the Inflation Reduction Act here in the United States. And they had included tax credits for United States manufacturers to make batteries here in the United States. And they don't apply to companies that make batteries in other countries. So there could be some complications for now Tesla to roll that technology or roll that manufacturer capability outside of the United States into some of their other factories. So there's some complications there, but the German economic minister said he has no information on a change of plans for the Berlin Gigafactory. So this could be a lot of Tesla news could end up being rumor. Now, President Biden is to announce approval of $900 million in EV charging funding. This includes, obviously, you have the straight charging companies like a ChargePoint and an EVgo and Blink Charging, and there's a few others, but it looks like Tesla is going to be able to apply and potentially get some of this $900 million in funding for a company that is wildly profitable, has, I believe at this time, either very little debt or no debt, has plenty of cash, has plenty of positive cash flow. You gotta love the government handing them money to increase their competitive moat in their charging facilities. Obviously, there's going to be some people that watch this and don't like the taxpayers pay for this. But if you're Tesla investors, that is music to your ears. Now, Tesla is to require a power wall for solar roof projects. So obviously Tesla has that solar segment of their business where you can go to their website and order solar. In the past, you used to be able to just order solar tiles or solar panels onto your roof with the option of adding a power wall, which stores excess power and allows you to draw on that power overnight when your solar powers obviously aren't working because the sun is not out. Now they're going to force you to buy both of them. My hope, Elon Musk, I know you tune into the show, please add the Powerwall option for those of us that have installed solar and we're waiting for these Powerwall batteries to become more widely available and maybe for the price to come down just a little bit. I would love to have one of those on my house. Moving over to probably the most important segment of the show is the technical segment. The stock market was down big over the last couple of weeks. You had a big decline, okay? Literally a month ago on the day, you're up here at about 4,300 on the S&P 500, and now you're down here, down 11% in exactly 30 days, down here at about 3873. Now, one of the reasons why I have zoomed into this chart is this is actually a very, very beautiful chart of the S&P 500. You are making higher lows. You are also making higher highs as well. Now, the higher lows were a little bit steeper, but those are a little bit harder to sustain. Quite frankly, the S&P 500 could go where it's at right now at 3873, and it could come all the way down, probably down here to maybe 3700. Peel off another 100 points on the S&P 500, and you are still in the midst of making a series of higher lows and higher highs. That's exactly what you see when markets are bottoming. I'm not necessarily saying that markets are bottoming at this moment, but the point is you had gigantic volume today, okay? Everybody in the world is looking at the same chart as we are. They are seeing the same thing. You had giant volume. Look at this volume. This is the most volume we've seen all year, it looks like, in stocks today. You had a lot of people pile into the stock market. I understand some of this could be short covering. Some of this could be even positioning new shorts into next week as well. But this is a critical area in the stock market. When you have this gigantic volume, when you have this formation starting to start, you are looking for it to rebound here and then not necessarily move back to the top of the channel in short order, maybe over the next 30 days, maybe over the next 60 days. You're looking for a higher set of highs. So all of you that are messaging me on Instagram, I think it's going to go lower. I think it's going to go this. I think it's going to go that. Well, if it doesn't, you're going to miss out probably on a 13 or 14% rally over the next 30 days. Because if this technical formation holds, we should move back to the top of this channel, and that will be one of the greatest rallies that we've seen all year. Moving on to Meta. Now, I lost money on this one. I bought it. I've been buying it and selling it at the bottom of this range. I've made, I think, maybe $800 or $900 over the course of this pattern. Doesn't sound like a lot, but I'm not really risking a whole lot either. Well, unfortunately, it dumped out the bottom and I lost about $100 on this one. But again, I think we're getting to the point with Meta that the valuation is starting to make a lot more sense. I'm going to take out this technical pattern because, quite frankly, that one's over. Still, the dominant trend is this channel. channel, I'm actually anticipating if the markets remain very bearish heading into next week and you've got a lot of negative news, a lot of negative momentum, this one will probably come down to the bottom of the channel. That means with Meta, we're coming down. I've got to zoom this out pretty far. We're going to retest the lows that we made back in March of 2020. We're going to maybe even potentially meet these lows that we made back in December of 2018. That would take you south of about 135 on this one. That's probably where I like this one. Not necessarily from you could do it from a trade perspective, kind of trade the bounces in this channel, but from a fundamental perspective, at some point, again, you've got a $393 billion market cap on this one. I know I've been hard on this company, but every company has a price. And I think we're getting pretty darn close there with Meta. Moving on to Apple, this one we've had a plan, okay? And I want everybody watching this video to stop doing the very amateur thing, and that when stocks start pulling back like this, and over the last couple of weeks here with Apple, we've gone from $174 stock down about 14% down here to 150. And I hear it in my comments, I hear it in my DMs, I hear it in my messages. Well, I think it's going to go lower. I think it's going to go lower. Okay, that is a great thing to think. How much? Pick a price, pick a level, and hold yourself to buying that level. Because what I see all the time is 2 weeks ago here on the channel, I said, folks, I think the initial stop here is 157. Not really going to be interesting to me because I already have a large position in Apple and the momentum will have escaped. I think you're going to come a little bit lower. I said the next level of support, again, you could go back and look at our analysis on Apple. I said the next level is right here at about $150 per share. This is the first area where I'd kind of be interested in this one. But again, I have a large position in Apple, not necessarily looking to load up at a pretty higher price. I said if you break forth through this level, you're coming down south of probably 145. I am buying this one south of 145. We've been saying that for 2 or 3 weeks. The problem with a lot of investors is what they do is as this stock is moving down and it's down 10%, 7%, 9%, 12%, 13%, 4%, they keep telling themselves, it's going to go lower. It's going to go lower. It's going to go lower without having a target price where you step in. And now I'm not telling anybody, if you only have $1,000 to invest into Apple, I'm not telling you to pick a price down here at 140 and put in your whole $1,000. Put in $1. Just develop that discipline. The stock market is all about discipline. It's not about being right. It's not about being correct. It's not about picking tops and bottoms. That is absolutely 100% not what the stock market is about. It's about being disciplined. And several weeks ago, when the stock topped out here at 175 and it started to roll over, we said, here's the first area where we kind of like it. We like it a little bit more here at 150. And when it comes down here to 145, which I quite frankly think has a high probability of hitting next week, I will buy this one. Will that be the right decision? Will that be the low? Could this go another 40% down? Could it go down even further than that? Of course it can, but you've got to start creating levels where you at least put $1 into this stock, let alone $100, $200, $1,000, $10,000, whatever you're playing with from account portfolio perspective. Don't let the markets come back and then just say, oh, I think it's going to go lower. I think it's going to go lower. I think it's going to go lower. I can find a fourth grader to have that kind of analysis. Start picking levels with these stocks. And when they get there, you have to buy it. You have to execute on your discipline and your strategy. Even at the time, it's going to feel like it's going to go lower. At the time, you're going to feel like an idiot, but you have to do it. This comes from 20 years of experience doing this, but also reading and studying and talking with individual investors that have way bigger accounts than I do, as I'm sitting in their gigantic suite, their gigantic mansion. In some cases, I'm sitting on their yacht. This is the strategy they do every single time with every investment that they have. Moving on to Amazon, this one has pulled back a little bit. Again, we thought, look, a couple of weeks ago, it got up here to $145 after earnings. We thought, it was probably going to stall out there. There was a clear area of resistance there. It did get rejected. The first area, again, we've been saying this for weeks here on the channel, the first area where we kind of get excited for Amazon is it's really an arbitrary number, but it's right here at 120. You almost got to it today. It's not an area where I'm super excited about, but look, you're still making higher lows on this one. You're still making higher highs. If this stock rebounds, you need it to push above 145. That complicates the situation with Amazon because it's really going to take some strong earnings. I don't think you're going to be able to push forward above 145 on this one with absent of earnings. But look, we're October 27th. We're not that far away from earnings on this one. My area for Amazon is $100 per share. It's essentially retesting these, but I'm going to buy it 5% higher. I'm going to have the discipline to say, well, maybe it doesn't get all the way to 100. I'm going to start buying. Again, if I want to put $1,000 into Amazon, when I say I want to start buying at $105, I might buy $5. I might buy $50. I might buy $105. I might buy $200. I'm just going to pull the trigger there because trust me, if this stock goes from 123 down here to 105, that's a 15% move. Every news story on CNBC is going to be negative. Everybody's going to be talking about Jerome Powell. Everybody's going to be talking about next month's CPI report, and it's going to paralyze you as an investor. That's why you make these decisions now and discipline yourself to execute on those decisions when the prices come. With Amazon, again, you're looking at least $10 lower before I get excited on that one. Now, Netflix, I've had this green line marked out. The $200 even on this one was the first area where I would get excited. It has not come anywhere close to that one, so I have not bought this one. There is a second scenario with Netflix. You have this gigantic gap between 250 and 330 on this one. The momentum with Netflix is up in the shorter term. Obviously, longer term, far down, but the momentum is up. If the momentum stays in this name and we can get above these highs right here at $250 per share, shockingly enough, I'm probably buying Netflix actually when it goes higher because you have this gigantic gap. The momentum should carry Netflix, not necessarily comfortable through this whole gap, but you should comfortably come between 250 all the way up to at least 280, maybe even $300 per share, filling this gap. Gaps tend to be filled, especially on companies like Netflix, which have a pipeline of new revenue streams and those types of things. You get a pullback in this one. The first area I like is 201. Further momentum down is just retesting kind of the higher low channel that we're making with Netflix. Moving on to NVIDIA, our target's been pretty clear with this one. Now, there's an intermediate. I'm going to make it a little bit thicker so you can see we literally sat on this area today at 127. And I tell you what, if the fundamental backdrop with NVIDIA, or if I was just looking at this chart, I had no idea about between NVIDIA and any other stock, I would have bought it today, okay? There's a clear area of support. You have a gigantic 34% drop in this stock over the last 30 days. That is a dramatic drop on a stock of any size, but particularly one of this caliber. I'm obviously, from a fundamental perspective, assuming that Netflix, or excuse me, in this case, NVIDIA is going considerably lower, not necessarily that low, but I think we're coming a little bit lower from a fundamental valuation perspective. I could be wrong about that analysis because I tell you what, that would take you down nearly a 60% drop just from the highs that we made last month. It's a 77% drop from the highs that we made back in November of 2021. That's kind of what I have in play from a fundamental perspective. I could be wrong. You should have some support here at 127. It didn't surprise me at all. This stock hit 126 and some change today and then bounced all the way back up to close closer to 132. If you like this one better than I do from a fundamental perspective, 128, 130, where it's at right now, not the worst spot. I think you probably retest the lows that we made back here in March of 2021. That's at 116. That's where I'd like that one. Although you run the risk when you get down to 116, you could dump out the bottom like a Google, like a Meta did this week. You could dump out the bottom and see pretty acceleration in in price declines. Moving on to Google. This one was making beautiful higher lows, higher highs. It did dump out the bottom today, but it did reach an area of support down here at 100, which we've identified multiple times. Again, you can view our channel. When this stock started pulling back after the middle of August and started pulling back, we said, well, okay, your first area, if you're just desperate to buy Google, was here at 112. Okay, clearly it blew right through that. The other area we started to accumulate this one was at 109, 110. I had a bunch of people email me today, oh, are you concerned about Google? Guys, I have bought a million stocks in my lifetime that have gone from 110 down to 100. You think I'm really concerned about a 10% drop on a stock? I've had my portfolio go down 60% in a month before. I'm not concerned about a stock going down 10% in a week or 2 weeks, especially when you understand the fundamentals of the company and you understand the balance sheet, the buyback, and all the different types of things that Google has. And on top of that, they obviously have a dominant position. We liked this area down here at $100. The stock hit a 52-week low when it put a $100 handle on the stock. So you bet you I bought this one again. Can this stock go lower? Can it go from 100 down here to 85? And a lot of people say I'm looking at the $85 price target. Okay, that's another 15%. If that's your target, you better pull the trigger when Google gets to 85. Don't sit here and say, I'm not buying it here at 100. I'm going to wait till it gets to 85. Believe me, folks, the drop that we've had over the last month was 16%. If this thing extends to a 27 or 30% drop, which quite frankly rarely happens with Google. You've had some big drops in this stock, but oftentimes they're very easily explained. If your target is 85, I don't care where your target to buy this one, if it's 25 or 85, if it meets that target, you need to buy. It doesn't mean you need to unload your entire bank account. In fact, I believe that would be rather foolish, but you better buy at least 0.1 shares of a stock like this if you have a target. If you learn anything from today's show, it's to pick a target if it's lower. If your argument is stocks are going to get lower and lower and lower, that is not good enough. You need to pick a spot, and it could be from a technical perspective. It could be from a valuation perspective. You start doing a forward estimates on revenue, forward estimates on earnings, and you pick a number that you want to buy the stock at. That is what every single professional investor, especially the good ones, do every single day of their life with public and private investments. This is what real estate investors do. This is what equity, bond, Forex, any professional does this every single time. The argument that I'm not buying today because I think it's going lower is not good enough. Pick a level and you better buy it at that level. Now, speaking of Google, a little bit more specifically, okay, it's gone from 110 down here to 100. I bought it today. If it continues to go lower, I'm buying it again down here at $90 per share, probably more specifically $89 per share. There's a little bit of gaps here. There's some gaps. There's some thin candles here. If the momentum stays out of your name, you better believe this one's going to continue to go lower. But if the momentum returns, you're probably going to make higher highs on this one. And all of you that sat on the sidelines and said, Google's going to go lower, you're an idiot. Well, yeah, you're going to miss out on a 23% rally, probably in pretty short order. Moving on to Microsoft. We also picked levels on this one, and it hit it this week. The first level that we saw was 266. That got blown through. That wasn't really exciting. The exciting level was where Microsoft hit today, and I was a little bit more aggressive on this one. As you can see, these were basically the lows that we made back in June. We've essentially retested those June lows. Now, the momentum is clearly out of this name. If it reverses very quickly next week, we've essentially just made a series of higher lows, and we're probably getting much higher. And if we go higher highs, that would be a tremendous move on a stock like this. You're taking another 20% move. Not necessarily anticipating that, although it complicates the situation heading into earnings. Do you really want the stock momentum to be drained into earnings and have it being traded down here? I would love to be accumulating Microsoft heading into earnings. I bought more of this stock here at 245. I think it's a high probability the momentum stays out of this name. You come down here to 230. I will buy this stock again down here at 230. The rock bottom portion I am looking at, again, barring a lot of macro stuff, could certainly deteriorate things very quickly. But if my thesis is true that Q3 and Q4 of next year look absolutely beautiful, investors will start waking up to that idea. You've got areas essentially south of 230 on this one that I would love to accumulate this stock down at those levels. But this one, again, several weeks ago, we identified here on the channel that it went to 245. When stocks pull back to that area, if I say I'm going to buy it, I'm going to buy it 100% of the time. I don't care if a nuclear bomb has been dropped. You have to stay disciplined in the stock market. If you don't have discipline, you might as well pay a fee and let Charles Schwab or Fisher Investments or Morgan Stanley manage your money. Now, finally, moving on to Tesla. This one's setting up pretty beautifully. I think it's based largely on the fact that we have earnings coming up pretty soon on this one on October 19th. We're basically a month away on earnings here. And this one is probably going to set up very nicely because we know what the revenue is probably going to be. We know that operating profits are probably going to be pretty spectacular based on those China deliveries. And I think there is a scenario where if you have the momentum return to the upside in the markets, this one's probably going to retest the highs that we made over here, and that's another $75 higher. Look at how this stock is making some beautiful in the shorter term. Again, like intermediate term, we're making lower highs, but we're kind of contradicting that by making some higher lows. Obviously, the longer term, and I probably should have done this with all of these stocks practically, is the longer term trend on all of these stocks is a straight arrow upwards. That's why the excuse, oh, I think the stocks are going to go lower, is a terrible argument, especially when you don't have an area that you have specifically picked out where it has gone low enough. Tesla's making a very steep set of higher lows. If that momentum continues, that should carry this stock right up this red line, and we should very comfortably get back up into the 360, 375. If you hover at this area, you have the potential on earnings to gap up into that range. If earnings for some reason are bad, which I think are very doubtful based on the fact we haven't really had any shutdowns in China and here in the United States certainly as well, you could dump out the bottom. That is a wonderful buying opportunity for Tesla. South of 250 on this one, I would probably be really aggressive even south of 250, even though the momentum should carry you down to the bottom of this channel, which if it happens in relatively short order, take you down to about $220 per share. Tesla's very misunderstood. People remember it 4 or 5 years ago when they were essentially just kind of a pre-revenue, or probably a better way to say it, pre-profits. Okay, they weren't really generating a lot of profits. Since the Model 3 and Model Y, this company has generated wild profits. If you spend any length of time looking at the financials of this company from a logical perspective, erase Tesla from the top and look at revenue growth, look at the margins, look at the gross margins, look at the vehicle margins, look at operating profit, look at the reduction of debt, look at the acceleration of cash, look how efficiently this company is run, you would look at what amounts to one of the best investments in the entire stock market today. This company has a $950 billion valuation. And if electric vehicles are adopted at the rate people think they are, and the competition continues to flounder, well, this is a stock that could easily be worth double that in probably a pretty short period of time. All you Tesla haters out there can suck one. Hopefully you guys had a wonderful day. Hopefully you guys have a great weekend. We'll be back. I am so excited. I am so passionate about these markets as they pull back. Get excited, folks. Don't get excited on the run-ups. Those are boring. It's the pullbacks you should be excited about. And I tell you what, if the higher lows and higher highs continue on this stock market, you are in for a rip neck of a rally heading into earnings. And if the reverse happens, these things dump down heading into earnings, I'm excited about that. We have inflation. We have rising prices. We have the ability for these companies to raise prices. That is going to help revenues. It will help maintain earnings to a certain degree. Most of these companies have very little debt. They have high cash flows. They have no need to pay the interest rates that you and I are maybe paying on a car or a credit card. These companies are going to come out on the other end of this. My estimate and my thesis is for Q3 and Q4 of next year, things are going to look great. That means by Q1 and Q2 of next year, that's when investors will start to wake up to this fact. Forget about the CPI report next month. Forget about the CPI report in November and December. Who cares? You want them to be bad. You want investors to focus on that. You want them to cry in a little ball and say, I think stocks are going to go lower, but have no target and no plan when they go lower, because eventually investors are going to start waking up to the fact that Q3 and Q4 of next year, no one's going to care about CPI. No one's going to care about interest rates because they're probably going to start heading lower. And all of these companies are going to be able to lap the revenue and the earnings targets that they have laid out for the previous year, and you're going to make higher highs and higher lows on the markets. And if you don't have a plan to get in when you're down 10% in a month and that scares you, well, quite frankly, turn off this channel, unsubscribe, go get somebody else to manage your money, and go grab your golf clubs and just play golf. You're not an investor. Hopefully you guys have a great day out there. Good luck with your investments.